Good morning, everybody. Welcome to the Flow Show. It's Friday. It's NFP Day. We're back on the bandwagon with that. Going to be the biggest number ever since last month, anyway. But it should be a pretty exciting one if there's a big variation. It's going to give the market its first taste of the jobs picture coming into the new year, even if it is December data. So it should be busy whatever. And we've also got that court case thingy coming out later as well. And we'll find out what that means for anything. Morning, Kay. All ready, locked and loaded?
Good morning, Ryan. Yeah, I'll be ready. Yeah, we're always ready, aren't we?
Yeah, except when we're sleeping or down the pub, and then we're ready for something else. Yeah, we're all ready to go. Right, let's get cracking. Once again, just want to make you aware of the sale we've got going on our trader funding program. 30% off all our accounts, instant funding and assessment accounts. Check those out. Use code New Year 2026 to get that discount until January the 18th. Right, on we go. Let me get all my bits and pieces ready. Also, don't forget, we do have the non-farm payrolls competition running. If you haven't put your number in yet, be quick, because you've only got until obviously 1 second before the data drops to do that. Once again, I will pop the linkity dink in the chat there. So you've got that for the non-farm payrolls competition. Right, let's get stuck into trading stuff. China had some CPI data out. They continue to push away from that 0% mark and that disinflationary process. CPI coming in at 0.8% as expected, up from 0.7% previously. Let's see if they can keep an eye on that and keep it going. PPI as well, coming in soft, but not as much as expected, but still a pretty negative number. That hasn't really changed thoughts about whether they will ease or not, but that just might mean that they may look at other measures rather than actual rates if that inflation keeps ticking up. With some data out of Japan as well and some healthy spending numbers, although this has been a bit flip-floppy over the latter part of last year. Household spending up a whopping 6.2%, beating expectations month on month, turning around a negative 3.5. Year on year, also beating expectations, up 2.9, reversing a negative 3% last month. So again, a bit flip-floppy, but we had poor wage data that could be a bit skewy because of bonuses this week. And now we've had household spending that also could be a bit skewy and things. These numbers were taken before the majority of Takeichi's policies were announced anyway. On the trade front, or on the China bum fight front, because that thing's still going on, Japan's Kihara is aware that China has delayed imports of sake and food products, and they're watching that situation clearly and will act appropriately. So that situation's still simmering. We've had a sources piece out as well on the Bank of Japan, saying that they are going to keep closely watching what's happening with the yen and if it weakens. They're also seen as holding rates this month, which isn't really a surprise. That depends. Some in the market might think that they are on a different timeline to what they actually are. Apparently, sources said that they see little need to change their underlying inflation view, and they may, though, even look at downgrading the CPI outlook on those government measures. They have no preconception on when they might hike or the pace of hikes. They said they may raise their economic growth outlook on the back of stimulus. So there's two aspects to look at: lower CPI and higher growth, which is not necessarily the right cocktail that they want. As I say, as far as things go, the main gist of the story is that they will hike when they're damn well ready to hike again, whenever that may be. Kay, no real change the thinking there. The source is not really giving us an awful lot. Maybe some forecast changes, but other than that, as normal.
Yeah, give one, take one. Maybe if we look at the nuances, the upward revision of growth is a positive, obviously. The maybe the revision lower inflation on Japanese government measures is maybe a bit of a new one. Um, but I mean, Dorian was already higher when that report or those hints or whatever came out. Yeah, maybe that's one to keep an eye on. Again, obviously, Bank of Japan, everybody in Japan is watching inflation very closely, but it's more a case of nuances than really a change in rhetoric from the Bank of Japan. We know that they are not on a preconceived path for the hikes. We know that the conditions that need to be in place for them to continue to hike, and now we're just back in a wait and see back in a wait and see mode for them. Yeah, I think this Dorian was just pausing, as we said over the past flow shows, and now has followed up on the rest of the dollars being better beat and finally broken above that 157 figure 15. But it happened before those that report came out.
Yeah, and I think if we're looking forward, I think if we've got to stick our neck on the line and when they might hike next, I think it's probably going to be after the turn of the fiscal year, and once they know all this wage stuff coming in,
Yeah.
if inflation's still up, if wages are growing a bit in the data, if nothing untoward's happened, then maybe we're looking at the second quarter, maybe towards the end of the second quarter or in that second quarter period before they look to
Mm.
hike again.
Yeah, definitely. That's what I would say too. I mean, they we know that they are not active hikers like Fed also may have been in the past. It's a different game in Japan.
Yeah, absolutely. Right, moving on. We had a bit of data out of Japan. Trade data, exports coming in a bit soggy, minus 2.5%. The trade surplus reducing a little bit there. Industrial production, though, came in a positive 0.8%. We had some Norwegian CPI data there, a little bit on the warmer side. Their core CPI ticking up to 3.1, headline CPI up to 3.2%. Those guys still expecting maybe a cut or two cuts some point this year, but they won't be doing that with inflation going that way anytime soon. We had Eurozone retail sales out as well, coming in at a whopping 0.2% in November. We really should take November, December together. Year-on-year number looked a bit better, but that month-on-month number still very low for what is the start of the strong retail period. Over at the ECB, Portugal Centeno, he's thrown his hat in the ring to take over from the silent one, De Guindos, as vice president. He joins Croatia's Wojciech, who's also got his hat in the ring to replace, as I say, De Guindos. We've also heard from the newbie from Bulgaria, ECB's Radev, says the current level of rates is appropriate. He's not going out on any limbs in his first comments there. Yesterday's data from the US, we got jobless claims coming in pretty much standard, 208,000. Continued claims just ticked back into the 1.9 million, but no rockets anywhere there. That's still staying pretty steady. We had New York, well, we had some trade balance data as well, which looked a bit better. The deficit coming down to 29.4. Again, this number has got a lot of all the trade stuff, tariff stuff going through it at the moment. So not sure how to take those numbers as well, and the counting of those numbers, because it's October trade balance data as well. So it's a bit still playing catch up with that. For the Fed, Q3 unit labour costs came down 1.9%. So that's a bit of easing in the jobs market from firms as well. Productivity, though, coming in as expected, 4.9%. So that's still looking healthy. We had the New York Fed out with some inflation expectations. 1-year inflation expectations picked up to 3.42% from 3.2%. 3 and 5 year stayed unchanged at 3%. Yesterday evening, we had some consumer credit data for November coming in, missing expectations of 10.1 billion at 4.23 billion. So a bit of a slowdown of credit there. Nothing that we should get worried about just yet, but let's look to see if we get any trends. Again, this is coming in the start of the 2-month holiday period, Thanksgiving and all that stuff. So it could indicate a bit of tightening of belts over in the US consumer. But as we've seen from retail sales time and time again, those things continue. Now, what I would add to that is that we were pointing this out last year as well. There is a small percentage of the top earners that seem to be dragging everyone else along, dragging this data, retail sales data along. So if we are seeing a bit of a collapse in consumer borrowing at the bigger, larger percentage of those with lesser incomes, that might put a bit of drag on the numbers. There's only so much lifting the higher earners can do as far as sales are concerned. So that's something I think we're going to need to watch into the new year. Anything you pulled out of any of that data, Kay?
Labor costs a bit down, but that's another one that could actually continue to go down if you see all the progress on AI and tech, etc. So not sure if that number is going to be as important as it may be, but it may give us a bit of a look what's happening outside of all the tech and AI developments, what's happening in the street economy, right? So it may still be a decent indicator. For the rest, not really anything that springs out. The Atlanta Fed GDP now is as optimistic as usual. If we have to believe those people, the US is going to print a GDP which has rarely been seen over the past decade.
Yeah, exactly. I don't know how they're going to count that. I mean, I don't even know how much of the numbers they've actually going to have or got because of the shutdown and everything. So yeah, that's going to be a right old mess, no doubt, when we get those numbers. We'll worry about that when it happens. Over at the Fed's Mirren says he's looking for about 150 basis points of cuts in 2026. This week he said he was looking for more than 100. Now he says about 150. He doesn't know anything about his future at the Fed. His term is officially up at the end of January, but depending on how things go and who else comes in, there is a possibility that he remains there or gets put in there again for another short-term period. Treasury Secretary Bessent says the only ingredient missing are more Fed cuts for a stronger economy. He also said that effective immediately, the US is withdrawing from the GCF, which is the Global Climate Fund or the Green Climate Fund, whatever they want to call it, something that nations are paying into so that we can all breathe clean air and have windmills in our gardens and that bollocks. He also said that Trump may decide on who's going to be at the Fed or new Fed chair right before or after Davos, which is in a week or so's time. I'm looking forward to that, as usual. He said there's still 4 candidates to consider to succeed Powell. Now, I thought we were down to 3, and then it went back up to 4 because Bowman went back in. And then he said that Rick Ryder is yet to be interviewed. So I don't know where we're at with this, Kate. Who's in it? Is it 3, 4, 2, 1? I don't know. Who's it going to be?
Yeah, the more the merrier. So let's keep it to 4. The one thing that may be interesting here is, and I don't know exactly who came up with that, but it may be if they decide relatively swiftly, meaning right after Davos, which will still be before the end of this month, it could be that the replacement of Myron will be the next Fed FOMC Fed chair, because would be kind of some logic in there that they put that person in place before Powell leaves, and in place of Myron, no?
Yeah, could be. That's the thinking anyway. But yeah, I guess we'll see. I hope our mate Zervos is still in the running as a late outsider, because that'll really liven things up. So anyway, we may know in a week, 10 days, whatever, whether we got a new Fed chair or not. One thing that Besant did make clear, and this is what we were speaking about yesterday regarding Trump trying to hit big investors in the housing market. He says we're not going to make institutional investors divest from their home buying. Says we're going to put an end to the buying. So he's not going to tell firms to sell up their portfolios. Well, just yet anyway. Wait to see what happens later on. We've got new QE, mortgage QE, because Trump is getting representatives to buy 200 billion in mortgage bonds because he wants to get mortgage rates lower. How's that going to affect anything? Mortgage QE.
So far, it hasn't affected anything. Yields haven't really reacted to it. Yeah, let's wait and see when that will be put in place. I mean, if you combine it to a new Fed head, bringing rates lower, plus buying mortgage bonds, it's yeah, it's probably going to keep at least yields from rising too fast if they already had to rise. It's interesting though, because I don't know. I mean, I guess the Goldmans and J.P. Morgans are already ready to repackage a bit of all that and bringing us back to 2006, 2007.
Yeah, yeah. So, well, it may mean that the NBA data, the weekly NBA data, might come into a bit of focus to see how that moves or impacts the housing market and the mortgage market as well. So we'll keep an eye on that over the weeks ahead. A bit of jobs info ahead of the NFP today. According to US government data, the US federal workforce has fallen to its lowest level in at least a decade. I don't know if it's just because of the Doge cuts or this is part of a trend that's going to continue, but it might be something that we need to keep an eye on when we get to the jobs numbers later, just to see if there's any impact in government jobs, as we saw in the NFP release last month. Right, here we are. NFP, 66,000 expected. Your rough range is probably somewhere between 50s, 70s at the moment. That will follow the 64K that we got last month. The unemployment rate is expected to tick down to 4.5% as usual. When you look at that rate, look at the participation rate, because that can have an input on that unemployment rate and either make it neutral, good, really good, bad, or whatever. We've also got Canada jobs coming up as well. They're expecting a minus 1.8K. Now, these guys over there, they've been about as good as forecasting what it's going to be as the sun coming up in the morning. They've not done a very good job. I'll show you quickly. The forecasts to the actual have been absolutely shocking. Minus 5K came in 66K, 2.8K came in 60K, 4.9K came in minus 65K. So I think Kay, we can ignore the forecasts from these guys, at least for the Canada number. But yeah, it could, if it's another positive one at least. I think that's what we've got to look for. Is it positive? Is it negative? December numbers. Maybe a bit of seasonality in there as well, but definitely one to look at.
Yeah, because they do have quite a bit of a full part-time turnover over the turn of the year, right? So we could be in for a bit of a surprise number on either side of the fence. I'd say that if it's a negative number, it may have a bigger impact on the Canadian dollar, because I would suspect that in a month like December, at least there should be a relatively big part-time hiring, but just on the tip of my toes. But I think a negative number may have a bigger impact on the Canadian dollar, seen already where it trades at, and the market already being on the defensive um, on the Canadian dollar. So I'm going to say it's going to have to take a quite a big divergence between the Canadian and the US dollar, the US numbers, to really materially bring dollar CAD down. And by materially, I mean getting back under 138, right? I mean, we know that at times Canadian dollar can be a bit volatile over those both reports. So shouldn't be surprised about a 50 pips or so move. But to bring it sustainably back under 138 should really that's going to require some extreme divergence between both of the reports, I would say.
Yeah, exactly. And it's always a dodgy one to trade when you've got both reports. The US number usually will have the heavier weight. But if it comes in around expected in the NFP and there's a big variation in the Canadian numbers, then you're going to see dollar CAD moving on the Canadian side of things. Obviously, you can get a double wind where good US data, bad Canadian data, or vice versa, and then that's two winds blowing in the same direction for dollar CAD. So yeah, it's going to be interesting one way or another. I'm hoping that we get a big variation in the numbers, just so it gives us a bit of volatility. Because I dread to think what happens if it all comes in as expected, Kay.
Well, in that case, we wait for the SCOTUS meeting, or we just go to the pub.
Yeah, I like that idea. Right, I suppose we better talk about that. The timing of this thing is any time from I think 10 a.m. Eastern
Yep.
time, which is 1500 our time here in the UK. From what I know, I don't know if we're getting any sort of press conference or it's just a press release, website release, or whatever. So we're all going to be, everyone's going to be refreshing the websites and whatnot. We still don't know if it's going to be an actual initial ruling or an opinion. It's supposedly going to be just an opinion. How detailed it is, we don't know. If it's very detailed, we'll have to wait and see. I think we have to base it on whether it is a straight no, this is illegal, or it's likely to be illegal, blah blah blah, or whether there's some elements that they have to look at further, and it leaves things more uncertain. Still a bit unsure what the actual market reaction is going to be to this. So it's going to be a bit of see what happens and pick through the pieces and make a decision after. Okay, I think.
Definitely, because we don't know whether there, as you say, we don't know whether there is going to be a ruling. But well, I mean, the assumption is that they are going to rule against the tariffs, but then the U.S. government will already have done, as Besson already mentioned, their homework and be prepared to install new measures or very rapidly. The worst case for me personally, the worst case would be that they completely rule it unlawful and that there needs to be repayments made. And then we still have two possibilities here. Whatever I think it should give the dollar a little knock on the head, but on the other side, the equity markets are looking at it positively because all the small and medium sized companies will get money back. So it could be very big for stuff like the Dow, for instance, if they rule against it. But really, I'm going to be reacting instead of anticipating anything on that meeting, to be honest.
Yeah, exactly. That's if I do anything at all at that time on a Friday afternoon. But yeah, we'll have to wait and see if we get any big moves.
Which by the way, could if let's assume that the NFP report doesn't show too big variations, which might then the market is probably going to come to a standstill and waiting for the SCOTUS meeting, right?
Yeah.
That's a possibility for this afternoon. It should be a big mover, both of them together, but it could be that the first hour and a half, yeah, we see a bit of an algo blip on the dollar, and then come back to where we were before going into that SCOTUS meeting. So for today is not necessarily going to be an obvious one-way ticket for the dollar.
Yeah, and traders should bear that in mind, depending on what positions you got on going into both those numbers. Just be ready that it could go any which way. Right, let's have a look at what's going on in markets. I've actually got oil on the screen, so we might as well start there quickly. There we go. When my thing decides to wake up, come on, chop chop. We've got business to take care of. So we've had a bit of a lift up in oil. It's still staying in the range. US WTI ticking up a bit. Brent's had a little bit of a boost, a bit of a bigger boost today. That's taken it back up towards the mid 60s. But again, we're still in this sort of, malaise that we've been in for quite some time, though. We're obviously up at the highest for quite a few weeks. Doesn't look like oil's doing much to the Canadian dollar. That correlation's been broken down a little bit. But again, if things quieten down again and we get up moves in oil, then we might see something going on there. Dollar yen, that's taken off into the 157s. And I was saying about it this week. I did actually try a short yesterday, just a little scalp. I got a bit away, but stopped on the rest, which reminds me I've got to update the trade room. But I was saying earlier this week, we had been building up a bit of pressure. And if we did get a break and it managed to hold, it might kick on. It has. We've got up to pretty much match these highs, 157.70s, and it's holding it at the moment. So I think I might look at this one for a bit of a dip by K if the US news isn't too hot.
Yeah, actually would like just that big enough or but not too disastrous, big enough miss on the LFPs to bring dollar yen back down to 157, and then buy it again now. Having said that, we still have to bear in mind that if it really takes rallies another 200 points up to 160, somebody at the MOF may be getting a little bit annoyed. So there's always a little bit of caution to bear in the back of our minds. But yeah, it looks like we may be on the at the start of the next leg higher there in the dollar yen. It's been and also there's that China thing lingering. Shouldn't be helping Japan too much either. Had been ignored, but it always roars its head up after a while. So yeah, I'm totally that side. I'd love to see a bit of a dip in dollar yen and then try to buy it again.
Yeah, and we are still at high intervention risk. They haven't been very verbal about things in the early part of the year, but thus far anyway, because we have seen a bit of sideways action for the last couple of months. But yeah, I think if we're breaking up through these highs, 158s, then we're back in that game again. And if you're long yen pairs, you got to be careful. Got to be careful if we're short yen pairs because these moves can accelerate. So we were firmly in intervention mode coming into the end of the year. That hasn't lessened too much. So just bear that in mind. I might as well have a look again at dollar CAD while we was talking about both jobs reports. We've been turning around my 138.60.70 level on this one. I am a little bit long with a pretty tight stop. We're trying to hold it at the moment. I might throw it out before we get to the jobs data because it could get flipped around always if there's some big numbers. But this is going to become a bit of a pivot level, I think, at the moment. And perhaps where we close today, this week, depending on what side we're at, may be that we need to take direction from that. But yeah, at the moment, we're stuck around this level and can't do an awful lot on that. Euro sterling, that came off, as I said yesterday. We couldn't get through the 86.90s. What would happen on a test down at the lower end, the top of the zone? We nicked into it, but by and large, we're trying to hold it again, which is giving it the impetus to have another go at the 86.90, 87. If it gets through this time, then we could be on for a bit of a move up to go and test that 87.20. If we bang our head here again, then we're probably going to be setting up a little bit of sideways action between there and the bottom of the zone. You got any more feeling for this one, mate?
I'm keeping my longs, and it's grinding higher. I wouldn't need too much of a dip to start adding again. It looks to me like it's just slowly building up to perhaps something better. Obviously, we need to break higher as well. I mean, as you say, 80, 86.90, 87 the figure, 87.15. They're all levels that have been traded quite a few times, which we are going to have to break again topside. But it looks as if I'm not sure. I was really trying to wait for to get a really good test of the 86 figure a quarter, but it may not come at all. I don't know. It may be data driven, but I don't see too much of the data coming in, which are going to show us like a 1% move also to the downside, right here and now. I mean, to be hopeful to load them up lower down. So yeah, looks to me like it may just continue to grind a bit higher, and also because cable looks pretty vulnerable to me, and that may just help the cross along.
Yeah, that's it on the 134 again. I mean, I can still see some scope for a bit of downside in euro sterling on the back of maybe a bit of year end data positivity, particularly from the retail side. I think that's a bit of a risk. But I've read a couple of banks, or I've seen some notes on a couple of banks, Commerzbank and Danske, getting a bit bearish on the pound now, pretty much for the same reasons we've been selling it for the last 6 months.
Okay.
I'm not sure that's good for us, but they're coming around to the same way of thinking that we are and have been. So I wouldn't rule out seeing a bit of better data in the next couple of months, and maybe we get a shove down. And for me, that'll be the time to start piling in, add into positions, and getting a build up for the sort of Q2, something like that.
Yeah, I was just looking at what's on the agenda for next week, but we have to wait until Thursday the 15th to get November GDP out of the UK. Just looking at the UK data, I mean, okay, we will have some European data as well, but I was just looking at the UK data to see if anything could be driving the sterling. But apart from that, there's not much going on next week. But the thing is, I've seen some articles about the job market really starting to deteriorate in the UK. So that's another bit. If that would really materialize, that could weigh on the sterling as well. But yeah, okay, I'm in that in that zone where I think, is it time now to go really short sterling, or do I have to wait? So I'm a little long euro sterling again, but it's not something that's going to make or break my account this year. So I'm still a bit waiting to see whether I could get better levels or not.
Yeah, no, I think you're right about that, and I'll make you right about the job scene as well. I think if I saw the pound rally on better consumer data, that's a rally I'll look to hit, because I can't. We know that we can't see the jobs picture getting any better anytime soon, and we're probably going to get a bit of seasonal washout from holiday hiring, Christmas hiring that happened in December. So yeah, I think I'm going to keep an eye on the retail, the consumer, as my guide for the economy for the next few weeks anyway. Right, mate, I'm going to kick it over to you quickly if you want to have a look at good old cable.
Yeah, so the cable here, it depends where you really put your line, but I just went for the parallel here, and because it just coincides. Well, now the trend line has come a bit up again. We're just on it, which is also the low that we saw over fixing time in back on the 31st of December, and slightly below where we had our fifth low and yesterday's low. So we're around there again, but it looks a bit fragile to me, especially if we would manage, or if cable would manage to get under that 133.90. I would still argue that the main level is somewhere around here, that 132.85 figure. But already, if we start to get under 133.90, 133.70, we could see a bit of an acceleration on the cable. Obviously, that's going to need a slightly better than expected US report this afternoon, but it doesn't look as if it's going to have to be a strong beat to take it through here. Just because how the sterling has traded off late. You look at the euro sterling. You look at the cable. It's looking a bit weakish here. If we would get a mildish miss, and we have a bit of a bounce back, I think the first zone here is still that hinge 134.50.70 on the cable, 55.70. That's going to have to break and hold for this move to just be another correction that we saw on the way up, and then we are going to move higher again. But the way it trades right now, it does look like that start of the year move was just what it was, and some fresh flows, or couple of flows, that bit of rebalancing, a bit of rotation, and we lost all of it, even more right now. So it looks a bit fragile to me, and so that's kind of the side I would be looking at if the report out of the US is not too bad. I was short, but just out of safety, I took it back and just banked the pips, and waiting for what's to happen on that US report, and obviously let's also not forget that SCOTUS thing. Euro dollar, s- same look, but maybe a little less fast. We're turning just below that 50% of that November December rally around 116.50, 55. That's our little first measurement, I would say. Whether we close the week or above or below could be good enough to tell us where the next move will be. Similar to everything that's happening in all the dollar pairs, we are slipping and sliding on the euro dollar. The dollar is doing okay. So the mood, I think, right now for the dollar is, it could be rather a buy on dips for the dollar than a rally selling mode. But we have to respect the levels, and especially in the euro dollar, I would say it could be a bit more resilient than some other pairs, like for example the cable and what Ryan. Did you show the dollar yen, by the way, or
Yeah.
yeah? So what Ryan was already showing on the dollar yen. Dollar yen is one of those where I would rather buy the dollar dip than maybe on this yeah, on this euro dollar. Euro could, just because of the crosses, be a little bit more resilient, but a good report is probably going to send it down into this 115.90, 116 zone, and there I think we will have to make a decision to what's going to happen next. There's a lot of technicals calling for this moving to the 116 and then starting to bounce. So take everything into account. Let's see if we get down there, what the reaction will be. Obviously, on a very good report, I'm not going to even put my butcher's glove on to try and catch a knife, because I think the dollar could then continue to do
Just before you
pretty
jump on
well.
something else, Okay,
Yeah.
just in euro dollar, it's probably too far away, but you never know. We do have a big expiry down at that 115, over 5 billion
Oops.
going off today.
Yeah. Okay.
So
115 being
one of my
here,
biggies.
which is right around the lows of that move. Um, you never say never. An hour and a half. If you print 100K and you're back in at 4.4 unemployment rate, for instance, the dollar could really accelerate. But yeah,
Yep.
that looks a little far away to magnet in the immediate future, right? There's one I think which is interesting right now, and that is dollar Swiss is bang on that 80 level. And when you look at stuff like Euro Swiss being slightly on the defensive as well, um, this could be an important close of the week. Whether we are above or below that 80 level, it's going to be a little bit psychological. So that could be an interesting dollar pair to trade. I'm going to keep a pretty close eye on what's happening here in that dollar Swiss to close the week. And I would say same thing there. Looking at how it behaves, Euro Swiss, for instance, I I may be tempted to catch a knife if but therefore we may have a test of 79.60 and then hold, and then maybe we are going to grind higher again. I still think that the yen will be a faster mover. If you look at the low yield, still in the global picture, I still think that the yen may be a faster mover. But dollar Swiss may be one of those where you have a bit of a steady one if it decides to continue to go higher, especially if we get a close above 80. That would be quite interesting, I would say. Dimi, yes. Yesterday, I was actually thinking that where is it here? Dollar Norway was about to go higher, but then you have the reversal in Brent yesterday evening and into our morning, and the Norwegian kroner is doing better. We also had that Norwegian where is it? Norwegian CPI coming out this morning, which was a bit sticky, and so that's helping the Norwegian kroner as well. So yeah, dollar Norway came back down. Euro Norway also coming back down from above 1180. Um, I'm not overly tempted to do anything with this unless we break 10 or 1013, 1014 over the US data. A Euro Noki door is Dimi. I think maybe it's a rally seller. It could be a rally seller here. That's how it kind of feels to me, unless we see a very big dump in Brent. But Brent is starting to hold. I'm not overly sure why both oils are back up from yesterday evening, but I think the market also was a bit over optimistic on how much Venezuelan oil could hit the market, but that may take years to dig out of the ground.
BCom, mate. BCom.
Huh?
BCom.
Oh, become, yeah, yeah,
If in doubt, blame that.
yeah. Let's become yeah, whatever. Yeah, if I see a move back up into the 1180s, if we get it, I may be re-entering. I was short the other day, but I got it back well around here somewhere, and I haven't been trading this one. And last but not least, let's look at the metals. What's going on? And what did we see again? The usual US walks in, dumps it, and then we spike again. Yeah, we were talking about that become stuff, which is actually, we're in the window right now, but I do think there's too much going on the geopolitical side. And yesterday we came back down close to that 44.10, just a little below, and then it bounced again. I guess that on any of those beacon flows or whatever, if you see dips, it's probably going for the time being, it's going to be supported unless we see something really spectacular happen on the dollar, although we know that metals have not been, because all the people looking for those correlations on dollar and metals, forget about it. The metals are in their own world, but never say never. If you get like a really big up move in the dollar, we may see a deeper correction, of course, coupled to what that become stuff may do. But really, in the global scheme of things, gold, silver, palladium, platinum, they're all still very big. And we saw exactly the same thing in silver yesterday, even went slightly below that shorter term trend line. But all those major levels are still holding, and we're already back trading around 78. Those ones actually, if you would look for a dollar correlation, if something bad would happen on the dollar job on the U.S. jobs report, that in turn may actually push all those metals back up. And thinking about gold at 4,500, for instance, if that breaks again, we may pretty rapidly trade back at the all-time highs. And silver, if you get back above, start already with 78 three quarters, 79 and a half. We may already have a look back above $80 as well. But they're all of them. They are still finding volatility, but all still finding buyers on dips. And with that, Ryan, back over to you, mate.
Thank you very much, Kay. Thanks, everyone. Thanks for coming to the Flow Show this week. Don't forget to join us on Face, where we'll be covering the NFP live. So do take care trading today. Hope you had a good week. Have a wonderful and peaceful weekend, and we shall see you all bright and breezy on Monday. Have a good one.